Recessions are generally times of economic hardship. When companies start cutting staff and prices, the stock market tend to fall and stock prices tend to stay low for a while. But these are the best times to buy assets cheap and potentially make millions when the market turns around. In this video, I am going to show you what you need to do when this recession hits and how to get rich when it ends. So grab a cup of coffee, subscribe to this channel and like this video and let's go. The first rule that you have to remember in a recession are that assets are cheap. You can buy investments and businesses at a discount and position yourself to earn more when the dust settles. The first asset I will be talking about is stocks. This asset class is by far the easiest to invest in and the most likely to give you outsized returns. That's why even Warren Buffett, one of the richest people on this planet, loves the stock market. He has often been quoted as saying, in my view, for most people, the best thing is to do is owning the S&P 500 index fund. Now the trick is to hold these stocks for the long term to realize these outsized returns. The strategy is to buy a low-cost diversified ETF fund, such as a Vanguard, Fidelity, or Schwab, that tracks the S&P 500 during the stock market downturn. And if you are more of a risk taker, then I suggest buying ETF that tracks the tech industry, such as QQQ or QQQM. Historically, the Nasdaq has outperformed the S&P 500 during the economic recovery, but they are more volatile. The correct way to buy these ETF is through a method we call DCA or dollar cost averaging. The strategy of dollar cost averaging allows you to invest the same dollar amount consistently, whether the market is trending up or down. As a result, you would buy more shares of a stock when the stock price is lower and fewer shares when the price is higher. This strategy will really boost your returns in the long run. The other strategy is not buying all at once. Since you have no way of knowing when the market bottoms, you have to make sure you have enough money left to invest. And since stock commissions has been eliminated, it will cost you the same if you bought one share as opposed to 1,000 shares. For me, this asset class of ETF would be my biggest investment during the recession because when the turnaround happens, this asset class will most likely give me the biggest returns. The second asset to buy is real estate. Now I'm not talking about buying a house to live in. I'm talking about buying real estate that will generate positive cash flow after expenses. Generally, during a recession, real estate prices will be lower due to economic events such as layoffs, slow demand, and in our current situation, high interest rates. Since the Federal Reserve raised interest rates to battle inflation in 2022, the mortgage interest rate for new buyers have gone as high as 7%. This level of interest rate is pushing down the demand for buyers and will ultimately cause real estate prices to drop. It's simple economics at work. Less demand equals lower prices. Now when housing prices fall but rentals remain at the same levels, then you will get positive cash flow. And this is the best time to be in real estate. You will be able to purchase a reliable asset cheap while earning cash. Now all you have to do is wait for the next upturn when real estate turns up. And then you will be laughing all the way to the bank. The next asset is gold. Gold has been one of the most prized possessions around the globe because of its scarcity and beauty. However, smart investors likes gold because of its stability. It's a strong commodity that is always in high demand. Also, gold tends to hold its value for longer than many other types of assets, as it can act as a hedge against inflation. Historically, if you compare the dollar versus gold, you'll notice the dollar has gone down in value in the last 100 years, while gold has gone up in value. Although gold is not a perfect hedge against inflation unless you hold for a long time. And a long time means I'm talking like 100 years or more. It's far better than holding on to dollars. To me, gold is more of a store of value instead of investment because gold doesn't produce anything like an actual company. Gold is an alternate way to deal with a recession, so your money will not lose value. But I would make this a small part of your portfolio, since I believe investing in stocks and companies is a much better way to take advantage of the recession. And now we come to the last asset that you can take advantage of during these times. And that is I-bonds. In today's current inflation environment, I-bonds stand out for their top-yielding returns and relatively low risk. Because they're investments backed by the US Treasury, you're guaranteed to secure your principal at the very least, so they'll never lose value. And while you do have to pay federal income tax on the gains, I-bonds are exempt from state and local taxes. The current interest rate as of October 2022 is 9.62%. This is a great place to hold any of your excess cash while getting a decent return on your money. There are some disadvantages with I-bonds, namely number 1. You have to leave the money in for at least 1 year, otherwise pay a penalty for withdrawing it. So if you need liquidity in the next couple of months, I-bond is not ideal. Number 2. If inflation starts cooling, so will the returns on the I-bond. So don't expect the interest rate to remain at 9%. And number 3. You can only invest $10,000 per person annually into I-bonds. But if you're looking for safety and almost zero worries, then I would make I bonds a small part of your portfolio. Well, there you have it. 4 ways you can invest for the recession while you wait for the turnaround. You just have to be patient, hunker down and ride it out. I hope this video helps you succeed, and please help me out and subscribe, comment and like this video. Until next time, be safe, invest smart and see you in the next video.